Welcome to The Explainer. We're diving straight into the wildest, most contradictory overnight trading session this week. Seriously, imagine the total market chaos when the Fed and US Treasury completely contradict each other overnight. The spark? Well, the July FOMC minutes revealed a shockingly hawkish stance from the Fed. Get this, 3 dissenting members actually voted for an immediate rate hike thanks to rising inflation fears. The Fed issued a super stern warning, fully prepared to tighten policy if inflation doesn't cool off. But wait, plot twist. Just as panic set in, the US Treasury stepped right up to counter. They announced expanding long-term government bond buybacks, pumping massive liquidity right back into the market. This sudden cash injection completely overshadowed and totally neutralized the Fed's hawkish threats in an instant. So what does this all mean? It triggered an absolute explosion across global markets overnight. Gold saw a historic breakout, surging over 4% to hit roughly $4,526. Endless liquidity plus inflation fears literally turned gold into an unstoppable asset overnight. It's wild. Meanwhile, the US dollar index took a massive hit, crashing 0.88% as liquidity flooded in. The DXY dropped below 98.80, completely wiping out its entire recovery from the very last session. Wall Street finally breathed a sigh of relief, snapping a 3-day losing streak thanks to that Treasury cash. But hey, caution here, despite seeing some green, the underlying market structure remains incredibly fragile and weak. As Asia woke up, markets opened super cautiously, with traders just desperately trying to digest this US drama. Right now, the USD/JPY pair is hovering dangerously near that forbidden intervention zone of 158.20. All eyes are on tomorrow's Japanese CPI report. It could literally force the Bank of Japan to hike rates. So will a hot Japanese CPI trigger a massive sell-off tomorrow? We'll just have to wait and see.